I think the best number that they could look at, if you're saying I'm going to wait and see, then it comes down to, is it affordable? Is it the right financial decision for you to make? Because if it's not emotional and it's financial, because you're waiting and seeing on
everything's an emotional decision.
Emotional decision, right? So if you're just looking at the number side of it, you put the emotions out over here and you say, well, what numbers should I be looking at to know what am I waiting and seeing on? Home values. What's the average or median home value? What's the interest rate? And how much money are you making? Hey guys, my name is Robert McFarland, host of the 435 podcast. We're about to get into the housing market update for Washington County, Utah. So if you live in any city in Washington County, you should watch this episode. It's the newest updated market data on housing. If you own a house or want to buy a house in Washington County, this is the video you should be watching to get educated, whether you're buyer or seller. We're going to talk about permits and new construction because supply drives the market that we are in right now. We're going to talk about the Fed a little bit, but I'm excited for this episode. Make sure you hit subscribe. If you're just listening on the podcast, make sure you hit subscribe or follow on any platform. You name it, we're there as the 435 podcast. We are also on Instagram and Facebook at wealth.435. It's wealth435 on Instagram and Facebook. We also have personal social media profiles that we manage. We have a carrier pigeon that drops mail inside of chimneys. Mm-hmm. If you want to sign up for that, we have an owl.
Yeah, we have a newsletter through the electronic mailing devices.
Electronic mail, email. Also, if you want to subscribe to our newsletter, we're going to get in with the show. Thanks for tuning in. We're not going to try to talk about nothing like we did this last episode. Somebody told me, my mom told me I rambled too much at the beginning. We're going to get right to it. So, first things first, we're going to talk about supply and demand. So right now, if I'm a buyer, or not, let's start with buyers. Yeah. If I'm a buyer today, Jeff, what should I know about the current housing market? Being June 2023, what should I know?
I think the most important thing to know, and there's so many variables too, right? I mean, is your budget $2 million or is your budget $200,000? So when we talk about stuff, we're usually, is that good? I'm kissing the mic.
Yeah, you're doing great.
We're usually talking about, buyers and sellers relative to median home prices, right? Mm-hmm. So with that being said, you should know that Washington County, we're still, for the most part, in a seller's market all the way up through $750,000.
Yeah.
So the market's still pretty hot.
We're cooking.
Inventory is not, still not quite where it should be for a healthy market. Well, we're still fairly low.
So we got to a peak just around February.
Yeah, January, February.
And then now we've pulled back. So supply has come back. Demand has grown, even though interest rates have, interestingly enough, gone up.
Yeah,
so we're hovering around the high sixes.
Yeah, I think a lot of people in that median home price range are like, okay, I get,
So real quick, just for everybody, for specific data, the median sale price, so the home in the very middle of all the data that closes year to date is $500,000. It's $499,900 was the median home sale. The average home sale just year to date is $590,000. Okay, so our market is in that little window, $590 to $500, right? It's roughly $100,000. So as a buyer, if you're below $500,000, there's lots of competition.
Yep,
Still, even with high interest rates. Mm-hmm. If you're above, 600,000, there's still competition. Demand is high up even at that point too. Every price point all the way up until about 750. Is that right?
Yeah, 750. So if you're spending, $1.5 million, you've got some time. You can shop around quite a bit. There's inventory that's out there, but you're right. I mean, if you're spending $550,000, you better act fairly quickly. Not like it was a couple years ago, but it's still fairly competitive.
To the point, the data point, we have 70 days on market is the average days on market, 70 days. And this is Washington County residential only, right? It's not taking into consideration lot and new construction. It's just residential sales. Okay, so 70 days on the market is the average, up from 30 days just a year ago. So, last year at this point through June, we were at 30 days on the market, and we had climbed out of a hole that was 7 days out of the market in February before that. So,
which is wild.
So 70 days on market, that's a high water mark for the last couple of years. And it's normal if you take out the COVID chaos,
Take
right?
that blip out. Yeah.
You take that blip out, 70 days on market is pretty typical.
For sure.
So I think our average price sale, 590, is a new normal. I think we're coming into a...
Yeah, and 70 days on market's probably a new normal, which is great.
Yeah.
I mean,
it's not requiring people to scramble.
Yeah, nobody's scrambling. I mean, buyer's agents 2 years ago were doing in 90 minutes what you should have been doing in 30 to 60 days.
Yeah, right.
So to answer your question, if you're a buyer in the median home price range, you better be pre-qualified.
Get ready.
You better be ready to rock and roll.
Yeah.
And you better have an agent that's gonna take care of you.
Yeah. Well, and to that point, if you're buying and you own a house currently, it's a different scenario than if you're not in the game at all, if you're just renting, right? So always keeping in mind, there's different buyers at different, classifications. We have retirees moving here. It's about half of our market, right? 47% has 2 people or less living in their house, and they're over 55, right? That's the big chunk of our market. But if you're moving here from out of the area, your market is going to be for your experts in your market, because Texas is doing different than California is doing. That's doing different than Michigan.
Yeah, which is funny because I've got a couple clients, one from Texas, one from California, and they're both moving to St. George.
Yeah, my Michigan client, he sold his house immediately upon hitting the market. My Texas client, they thought they were going to be able to put the sign in the yard as soon as the kids were done with school, and 4 weeks later be here in St. George, and now it's June, and they're here in a vacation rental, like long-term vacation rental, because they know they're going to sell that house, but it hasn't sold yet, and they're looking at almost 3 months on the market at this point. So knowing that to be the case, real estate's local. It's very hyper local. As a buyer in Washington County, you got to be prepared. Get your financing straightened out. If you're a cash buyer, great. Start looking at
cash is king.
Cash is king, and it's always king no matter what the market's
to your point
going.
about being hyper local, I mean, Ivins is different than Hurricane.
Exactly.
Right? Ivins
exactly.
is, Hurricane's different than downtown. There's
and no matter what market, no one's sitting here thinking, I want to pay the very most for my house, right? And so everybody's like, well, I'm going to wait and see, is what I keep hearing. The problem with that is that history...
a text that said the same thing. We're going to wait and see.
We're going to wait and see, right? And the challenge with that is that history is going to say home values are ultimately going to only go up. It's built into the system that way. Supply and demand dictates where we're at. People want to be in Washington County. We're still building houses at the tune of, roughly 1,800 permits. So probably 1,800 to 2,000 permits are going to be pulled this year for new dwellings. And that's going to, there's supply and demand at work.
Can I tell you why wait and see doesn't work with real estate?
I love it. I love your
when
perspective.
people say this. It's not much different than when people are looking at the market. And they're worried,
like the stock market.
Yeah, like the stock market. Right. Okay. So here's the deal. What are your parameters that you would get in the market? And people that say, I'm going to wait and see, they usually can't define what those are. They'll say, well, I think housing's going to crash like in 08. I don't want to buy a home that I'm going to be upside down on. Okay. What does that
mean?
Yeah. What does that mean? What does a crash? So if price pulled back 40%, would you be ready? Oh yeah,
sounds pretty good to me.
Yeah, I'd be all over. Okay, and even if interest rates were at 25%,
Yeah, exactly.
Okay, if interest rates went to 3% today, are you ready? And there's no, they just, what I find it to be is that people are just nervous about making a big decision, right? Because ultimately there is a lot of data out there that again, investment properties, totally different animal than buying a home that you're going to live in, right? A primary residence.
Yep.
If it's a primary residence, life's pretty stable and you're going to be there 5, 6, 7 years at least. You pretty much, it's very hard to have that go wrong, right? So just do it. Just get in.
If you're in your house, and the other thing too is like if you're in your house and you're unhappy with the house that you have, the likelihood of you timing it perfectly right, where the value, peak value is going to be.
You can time markets, but the problem is that people that what I'm telling you is that the people that are saying normally I'm going to wait and see are the same people that have no idea to understand, and they're not doing any additional research to understand what they're waiting and seeing or looking for. They don't know what they're looking for. They just know right now they're nervous about this, so they're going to continue to wait and see. So are they waiting to see if it doubles in price? What's their game plan if they do? How are they getting into housing at that point?
If interest rates go up, what are you going to do then? If the interest rates go down, what is that going to cause you to do? Right.
Well, and I mean, I don't think people have any appreciation for the pent up demand that if interest rates, I mean,
oh my gosh, I'm like crossing my fingers. Please don't reduce it too much, because if the Fed
drops the interest rate, if the Fed drops the rate as fast as they have in the past, when they eventually do at some point, home prices are going to go up before you have a chance to get in with the lender and get your pre-qual done and get
it just goes so fast. I totally agree.
I do believe that one of your best opportunities at that point is to already own the home and refinance on your terms, right? So the trick is to buy a home you can afford to make the payment on, right?
And that you want to live in.
That you want to live in. And then when interest rates get better, refi, if equity picks up, refi, and have a contingency plan, have a good plan put together. But the problem with I'm going to wait and see becomes you don't know what you're waiting to see, right? I mean,
and the lever,
that's a generalized statement. If somebody's got a legitimate plan out there, I'm waiting for this home to come down to this price with this interest rate.
Good on them.
Good on you. It's not what I typically find.
So yeah, and so to that point, I think the best number that they could look at, if you're saying I'm going to wait and see, then it comes down to, is it affordable? Is it the right financial decision for you to make? Because if it's not emotional and it's financial, because you're waiting and seeing
everything's an emotional decision.
Emotional decision, right? So if you're just looking at the number side of it, you put the emotions out over here and you say, well, what numbers should I be looking at to know what am I waiting and seeing on? Home values. What's the average or median home value? What's the interest rate? And how much money are you making? Wages. So the affordability index is wages, interest rate, and then the price of the home. Mm-hmm. Okay. Those three things are going to determine if it financially makes sense for you to hold the home that you want to move into, right? What's my monthly payment going to be? How much money do I make? Can I cover that and still live the lifestyle that I want to live in? So average prices, we went up 96% from 2019 in April of 2019 to April of 2021. We went 96%. Okay. We immediately started falling. The median price started falling. It fell for 10 months straight. Fell by 20%, up 96, down 20. And now we've flatlined, and we've shaken up the whole average to being, from the 96 up, we've come back about 15% since April of 22. It's like 14.6, right? So that being said, the pullback has not been half. It hasn't, been pulled back as much as we might have thought it already had gone. So why did it stabilize? And it comes back to basic economics, supply and demand. Mm-hmm. We stopped building homes in Washington County. Nobody wants to move. Once they had a house, they're like, I ain't moving. I'm staying here. Less people are putting their homes on the market, and we haven't kept up with building. We're actually at 2 years ago was our single year permit high of 3,000. And we can kind of talk about permits here in just a minute, but we're only projected to pull 1,800 permits this year. We need to keep up 32 to 3,600 homes per year is what we would really need to keep up with their population projections. So the population projection is one number of how much demand people would want to come here and new humans would want to live. And the reality is we're not building. So the supply is not supporting that massive demand that's coming in. And so knowing that to be true, home values haven't continued to crash the way a lot of people anticipated in Washington County. Jobs where, our unemployment is basically zero here. Our wage growth has come up over the last, 90 days, not as much as we'd hope, but it has for sure come up in Washington County. We're getting good businesses coming in, paying higher wages, Tech Ridge and things like that. We have a good horizon. The future is looking bright for jobs and growth. So all that to be said, I don't see home values continuing to fall over the next 12 months. I think there's going to be some stability in the market over at least the next 90 days to 120 days as far as prices go. So if I'm on the fence one way or another, if you're a seller waiting to get a higher price, what are we waiting on? And what is that price? Because if we're only going to maybe appreciate 1%, per month, even over the next 90 days, that 3%, is that worth the potential change in demand to come down? And that gamble is a roll of the dice because you can't control interest rates and demand, right?
You can't.
So if I'm a seller, so we started with if I'm a buyer, we definitely want to just get educated on some of the fundamentals and understand what are you waiting on seeing, because right now is a great time to buy. If I'm a seller, it really just depends on the house you got, right? Like
Yeah.
if you got $1 million house, there's a lot of $1 million houses on the market. And if you're trying to hold out for some kind of price because, you know, you want to squeeze every single dollar out of whatever
Holding out
that
for a while.
you might be holding out for a while because the demand on that high end has definitely pulled back because of access to money.
It's beyond need, right? So the lower end is being driven by the need, and there's even houses up into the, you know, 600,000-700,000 range where you can say it's a larger square footage, and there's, you know, larger families that are, you know, maybe a little bit better off. They would be able to kind of justify that as more of a need still.
Yeah, not a lot of first time home buyers buying $1 million homes.
Yeah, I mean, you get into a $1.5 million house, you're not talking about, you know, the need for, you know, housing a large family or something like that, or special feature. Well, you're talking about people that have discretionary income that can just afford that, and oftentimes those people are, you know, people forget those people oftentimes have money because they're smart, and they're smart enough to know that there's not a lot of buyers in the market, so they can hold out for a better price, right? And they're being more methodical, and so in that upper end of real estate, you'll see more price adjustment, more volatility.
But you also see a slower market too. Like the expectation up there as a seller is be like, it's going to take some time. People are moving here from all over the world. You're not going to get, you know.
Well, a lot of sellers that are that have been in those homes for a while and have been in that crowd and demographic for a long time are understanding some of the people that had, you know, $500,000-$600,000 houses that over the last year have appreciated in that higher end. They're not as, you know, used to that type of feeling. So they're still expecting what they have in that, you know, $1 million to $1.5 million range. They're still thinking it's going to sell like a, you know, $500,000 house. You know,
that's not true,
as far as like a timeline and lining that up, and it's a different deal.
So if I'm a seller, right, and I'm thinking, what's my time look like? What do I want? My guess is if you have a house that's 1.5 million and you want something more out of your house, you're going to have to pay more. If you're looking to, you know, trade dollar for dollar, I'm going to sell high and buy low. It's probably not going to happen at the high end, right? I don't see that happening. It's going to match itself in the market. So there's some equilibrium in it. So the reason why you're selling is going to be super important. And then pricing your home. And we've talked about this even with some unique properties like up in Apple Valley that we've looked at recently, mobile home in Ivins, you know, some of these properties that are kind of unique in some ways. Those looking at market value, if I'm a seller, you got to get with a real estate agent that really knows, okay, what's a buyer looking for? Because it's not always just the statistics that an appraiser is looking at. It's, you know, does somebody value the West Side differently than somebody values, you know, the Washington Fields? You can't compare properties in Ivins like you can in Washington Fields or in Little Valley, right? You have to know the market of the house that you're in and compare apples to apples. So making sure that you got an educated listing agent. I would interview as many as possible. If you're interviewing me, definitely interview a couple more so I can show you the difference between, you know, somebody that understands the listing side and somebody that doesn't. But ultimately, pricing the home in a competitive way is going to get it sold for the most money, like real market value, right? If Coca-Cola is listed on the stock market for $100, and I say, well, Branden, I think we could sell it for 110. What are you going to say?
Well, I'd have to stop laughing first.
Yeah, like it's the market. The market's the value, right? It's not what I say. It's not what
what somebody's willing to buy it for.
It's what somebody's willing to buy it for.
The value of your asset is only what somebody else will pay for it. Not what you'll rebuy it for. Not what you think it's worth in your heart. Not the value of the memories you made in it.
One guy sold it at this price, and I must be worth that. That's not always the case.
Yep. No.
And with a home, a lot of times people get hung up with what they've done to the home, right?
I spent $100,000 putting this pool in. It's not how it works.
Yeah, I painted this room pink. You know, it took me 5 hours. It was you know blood, sweat, and tears, and it's like, well, you know, unfortunately, it doesn't.
Well, you're gonna have to repeat that 5 hours and get rid of the pink room, probably.
Yeah.
Jeff, is the the carpet being a little dirty, is that really going to keep somebody from buying the house? They could just put whatever carpet they want in it, right? I hear that a lot
all the time,
right?
Yeah.
So there's some things that are going to help sell it. And then there's some things that aren't going to give you a dollar for return, right?
Right.
And so I think in this market, knowing that you're in a competitive market, there is a supply on the market that's stronger than it has been in the last, 3 to 4 years. For sure, there's more competition. There are other houses for buyers to buy. So if I'm a seller, competition's out there on the selling side, and putting your house in the best condition to get the most money is really important. Getting a good stager in there. If it's vacant, getting some furniture in there so somebody can, imagine what spatially they can fit in this area or that area. It helps sell. But also if your house just has a bunch of stuff in it, getting somebody to say, hey, let's cut this stuff out. Let's set this room up like this, get it stage ready. Set the stage. Our partners that set the stage, they do a great job of helping us and helping our sellers get the house ready to go. And we have a great example of that going on right now. So we got a home that's coming up and the sellers are just getting ready to sell it. And there's 30 years of love and memories in this house. And I can tell from the owner, it's a deep love for the house. He understands also that he's only bought one house. He actually built that house, right? And it was a DIY build. Like he was the general contractor on top of it, right?
Not DIY, but yeah, he
he was the owner builder. Yeah, DIY is the owner builder, right? Like you're doing it yourself, right? And so because he doesn't know, he's trusting that we understand the market and where the price is the price is going to come. But, disconnecting the memories that he's made there and what the vision of the house was, to the reality of the market, it was hard for him just to kind of understand those elements. But walking him through it just one step at a time, the house is going to be so great. We're definitely going to get top market value because he's just trusting that we know what we're doing. So I'm excited about that listing coming up. But that was my message to sellers. Definitely want to make sure that you're interviewing agents and know that a real estate agent that's going to sell your house is going to be different than a real estate agent that's going to help you buy a house. Those are two very distinct skill sets. And so finding somebody that can do both of them really well is important. And
there's also a distinction on the listing side between an agent that's going to put a sign in the front yard and put the pictures on the MLS and do it for super, super cheap, and an agent that's going to put a sign in the front yard and put the pictures on the MLS and do a whole bunch of other stuff.
Top selling agent in Washington County has a reputation for being a discounted realtor, right? That will put a sign in the yard, put it on the MLS. Sometimes they allow the seller to do their own photos and he'll put them most on, most of the time he gives them the option. Like I could do it or you could do it, whatever, however you want to do it, I'll do it, right? And the success rate in selling those listings, 60%. Historically, it's less than 60. I don't look at the data every single time, and then it's tough to like track exactly what's a sale of that person versus somebody else's sale. But I know for a fact that the agents that are selling the most homes have the lowest success rate, and they don't always get you the most money. They don't. It's just the bottom line.
It's a volume game, and I'm not sitting here arguing that it's right or wrong. It just is what it is. It's a business model, right? Not necessarily what we prescribe to, but. My point is do you want value, or do you just want to get it done?
Yeah,
right?
Exactly. And we have options. We've had clients that say, hey, I don't need you to do much. I just need you to get on the MLS. They understand at their own capacity that they want to do it. And hey, whatever you want to do, we'll help you do it.
Goes back to the old adage. You get what you pay for.
Exactly. And we want to be super clear with our clients up front too, exactly what that is. So,
for sure.
So if you're listening, you want to interview us for the job, you can definitely jump on wealth435.com and just schedule a consultation and find out if we're a good fit or not. 15-minute phone call, and you'll find out, hey, are these the guys that I want to hire or not? And we can go from there.
We probably will be, but
we
might not be.
We want to work with people that know, like, and trust us. Exactly. That's the bottom line. And if one of those things doesn't match, then there's 2,000 other realtors in Washington County you can go hire.
I'm not aware of another real estate team out there that can provide actual financial advice with their.
I am unaware of anyone
as
who
well.
is.
So
that's why we got you on the team, Branden. Thanks, man. Okay, let's do a quick transition. That was real estate. We did it in, I don't know how many minutes that is, but a short time frame. But we're going to transition into the Fed, dude. I want to talk about, because this is the June update. The Fed yesterday chose, somebody called it
2 days ago.
2 days ago. Yeah. Oh yeah, 2 days ago.
Yeah, Tuesday.
A hawkish dove move by not moving interest rates. They called it like a hawkish move, even though he didn't move them. Didn't move the Fed funds rate.
You can't have a hawkish dove move. That's like saying a positive negative.
Well, I know. So we went to Zions Bank yesterday. Robert Spenlove. He's a senior economist for Zions Bank. He's on the board of
12
IHC,
different things.
University of Utah, adjunct professor, all this stuff. And he kind of went through a few of those terms. And you can correct me if you think I'm wrong, but basically Robert Spenlove, senior economist, he said nobody knows what's going on.
We understand. I wrote it down.
Do you want to know what percentage I agree with him?
0.
100.
Okay, sweet. I love it. Nobody knows what's going on.
That's impressive. If
you
Branden
made a-
can agree with you 100%,
You've nailed it.
you nailed it.
If you made
Robert
like a
Spenlove, if you're listening, you nailed it.
Spaghetti pot of opinions and threw it at the wall. That's about where it's at right now.
Yeah, he had a chart that it essentially explained that the governors, the voting board on the Fed, none of them really agreed on anything.
Yeah,
but at the same time,
or something like that.
Yeah, the dot plot. But they also unanimously agreed to pause interest rates, and they also unanimously agreed to raise them 2 more times this year.
Correct. Yep.
So they for sure are going to raise them, but they paused them for now.
Which to me,
Why
you have
wouldn't
to
you
ask
just
the question?
do it
Why
now?
wouldn't you raise the rate today? If you're saying we will
'Cause
raise it
you're
2
trying
more
to-
times this year, why wouldn't you raise it at least a quarter point?
So is it
No.
maybe it's driven by consumer demand and saying, oh, because it's summer, we don't want to rock the boat. We'll wait till people go back to school.
You're talking. You're
The election season comes up, the local election season comes up, and we really want to just distract everybody from that. So we're going to wait till the beginning of quarter or end of quarter 3 to really start to mess with people, drive buyer demand in the winter.
well. Here's the deal.
Look
So,
at me. Conspiracy.
yeah, Mr. Conspiracy Theory. Like, take off the tin hat for a second.
sorry.
In doing what they did, which was saying we're going to raise it, but not today. The bond market has called BS on them, right? And so the markets are continuing to rally, and it's not making sense, right? So
We don't understand as much as we thought we understood, coming from the very tippy top of the banking industry.
Yeah, Jerome Powell said that.
that's
This
what
was
Jay
Robert
Powell said.
Spenlove.
Direct quote.
Oh, that.
All right, what did Robert Spenlove say that?
Danielle Larkin texted me. She said, "This is my takeaway from this meeting," and I was like, I think
That's pretty much
takeaway.
what Jay Powell said. That's not a direct quote, not verbatim, but
Yeah,
And Jerome Powell, for anyone who doesn't know, is the chairman of the Fed.
Yeah, which I don't understand how he's still the chairman of the Fed. By the way,
That's a political maneuver, man.
Shots fired.
That's a political maneuver. I mean, so look back to 2021 and everyone was saying, yeah, inflation's out of control. It's going crazy. Fed saying, oh, it's transitory.
and he blew it.
As soon as Biden renominated him to be for a second term as the chair of the Fed, immediately, like it was days after, Yellen and Powell both came out and said, inflation isn't transitory. We're going to have to raise interest rates. We're going to be moving to a
Yellen
tighter
used to be
monetary
the
policy.
Fed chair, correct?
She's a former Fed chair. No,
Talk about the
no
hen
comment.
and it's the fox in the hen house. And the truth of it is what my takeaway from this all, because it always comes back to like the real estate side of it and why we have you as your financial pillars. You have some. You want to build wealth for the future. You want to go to work knowing that what you're doing on a day-to-day basis is going to get you to a retirement of some kind. I think that's 95% of the population. There's a couple of vagabonds out there that are like, I don't care about money and
The other five are entrepreneurs.
They're entrepreneurs or they're bums, right? Like they're just like bums. But like the vast majority of the educated public is working towards a retirement, and real estate is a pillar that we believe in. Assets under management. So this would be financial portfolios and things like that. There's all these other tools of creating passive income.
And
so
then insulating it with some insurances and stuff.
Yeah, and then risk management, right? Insulating with insurances. So knowing that the financial market at some level is a gamble, what I think, and correct me if I'm wrong, is if they don't know if at the very top, they don't know what they're doing, or they're claiming they don't know what they're doing. We look at the fundamentals of the market. My take is that because the tech industry and because the ability to be an entrepreneur is easier today than it's ever been, and the access to these public markets is so widespread, is that at some capacity, the institutional investments drive those markets. So you have these big whales that change the markets, and there's so many little fish out there that there's some stability in the stock market right now.
Yeah, I don't.
Because like
I think you're trying.
Facebook
you're
can
trying
move
to
the whole market, can it not?
You're trying to boil it down. They can move a part of the market. Yeah, I mean, okay.
With ETFs and all these other things, though.
Most of the gains in the S&P 500 this year out of 500 and was it 504 stocks in the S&P 500 now. is a result of like, I think most of it's a result of like 9 different stocks, right? So big companies can move the market, but big companies are owned by people. They're not like Jeff Bezos only owns like 13% of Amazon, right? Like he's not making, he's not trading money that's, pump and dumping markets and stuff. The people that think the market is quote unquote rigged, but think like real estate wouldn't be, it's the same fundamentals in the economy that cause problems for housing and problems for real estate are causing the same problems in the market and vice versa, right? The way that you value real estate, particularly once you get out of primary residences and now it's just an investment. So if you move to like commercial, right, especially, you value commercial real estate almost the same way that you would value a stock, right?
Yeah.
So if I was going to do an evaluation on Coca-Cola or just a blue chip, long-term value stock that I'm buying for stability or something like that. Coca-Cola just being an example, by the way, totally not a recommendation. It's really the same kind of process and thought track and thinking of valuing an office building, right? Or some kind of commercial real estate that's supposed to be a steady income investment. Yeah. That is still an equity investment, right? Yeah. So the forces that quote unquote manipulate the market would theoretically then manipulate everything anyways. So basically you have two courses of action in life that I really believe is. You can do one where you say, I'm going to play the game. I got to play it either way. So I'm going to try to learn the rules as best I can and I'm going to play it and I'm going to try to win, or I'm going to go hide under a rock, do nothing to participate and say, because if I participated, I'd be automatically screwed anyways. Well, I'd rather take a chance at not getting screwed and winning personally. So
from your standpoint, I appreciate that, because that point's, I think, super valid and makes a lot of sense to, especially hopefully to people that are listening right now. Looking at your stock portfolio and your 401k, it's this nerve-wracking thing. I've listened to people say, well, my stock took a dump this year because they're looking at this macro number and, they lost a bunch of money or they gained a lot of money. But most people in the market have lost in the last 12 months. Is that correct?
Yeah. Yeah.
So most people are there in a losing position based off of what you've seen and what was said by the Fed just 2 days ago. What does that mean for real estate? Can you bridge the gap between what the markets are doing and stock market and the Fed is doing and how that affects real estate from your perspective?
Well, there's a lot to do with whether or not the Fed has the intestinal fortitude to follow through with doing what they've said they're going to do, right? So if they follow through and they do continue to raise interest rates and they don't back off the quantitative tightening, right? You will see major troubles ahead. I do believe that. And they've said that they're going to do it until there is those major problems. And then you have right now in the market, people saying, well, I don't believe them. They're just going to, at the first sign of real, significant damage, right? They'll drop rates. They're going to start quantitative easing. They'll buy assets. They'll bail people out. They'll do whatever. Right. And that's what they've done in the past really, but we haven't really had to deal with that, especially, post modern monetary theory in a high inflationary environment, right? So even if the inflation's come down, if you just go back to quantitative easing, you're just going to stoke those flames of inflation in a major way. And so they have to go break things. If they do successfully break things and you see the unemployment rise, that's going to be a big indicator, right? Because if employment stays strong and interest rates go up and housing prices stay the same, it's that affordability, like you were talking about, like kind of the three things that make up the affordability index. If the affordability index kind of stays where it's at and people can keep, buying and they'll get new jobs and they'll move and this and that, I don't think we're going to see like a collapse in the housing market, right? Yeah. But if the interest rates stay high, you're certainly not going to see a growth in housing prices. I don't believe. You're for sure not going to see a 96% gain in housing in the next couple of years, right? These windfall, earnings in homes, I think is not. I don't think that's anywhere near the base case. I don't even think that's a case on the radar. Yeah. Even if they drop interest rates, right? It just goes back to like, oh, somebody can actually afford what you're asking for the home.
Yeah, demand increases, supply stays a typical way.
And I think if interest rates drop, right? I mean, you just have a bunch of builders ready to bring housing back online.
Yeah,
residential moves so fast compared to commercial, right?
It's
so,
true.
Oh, yeah.
Well, and land values are not coming down in Washington County,
That's
truthfully.
true.
And if it's 40% of the cost of a new build is land, or between 40 and 50%, it used to be like 20%. You were doing okay.
Yeah,
but
we talked to a builder yesterday who said that, you know, if your land acquisition price is higher than 20 to 25% of the total cost, you're overpaying.
yeah, it's tough for the builder to make the profit and then also have the demand be able to make the purchase. So all that to be said,
in real estate, land is the one thing you cannot depreciate. Just remember that, right? That's the price of land is not supposed to go down.
Yeah. Well, and we only have 11% of our whole county is privately owned. So if you're talking about our hyper local market versus, let's say, Utah County, that's just got vast swaths of flat land to go build on, right? All these farms, south of Salt Lake, where you could just keep building houses. They're going to continue to potentially keep up with supply, right? Where Washington County,
it's a little bit more finite number.
It's finite number.
Landlocked.
Yeah, right. And I was at the Washington City Council meeting just this last week, and they were talking about water and how they're going to manage water moving forward, which is very interesting and not something we want to talk about right now. But the supply, and even if once we get to build out, right, home values in Southern Utah are going to be in demand, and that's interesting that perspective though on what the Fed's doing is it could bring housing values down here, but I don't know if it's enough. Even if there was where would the major collapse in jobs be in Washington County? I mean, the hospital would have to go out of business. Teachers, the government would have to start laying people off, which they never do. The university, and then
if construction stops, construction's a pretty decent chunk of the.
But think of the construction projects. Like, what do we already don't have enough laborers to build the houses that we need. Like,
it's almost like we're negative unemployment.
Look, I'm pretty bullish on our area here, and I don't think we're gonna have a housing, collapse, or even if we saw a broad, disruption in housing and pullback across the country. I think St. George is going to be relatively insulated. I'm not saying there wouldn't be.
We're on the map now too.
My opinion,
so people are coming here from all over the place too. So like a broad collapse, there's still these little pockets of places that aren't going to.
But and people say that, but I just I'll remind you that if there is broad pullback in other markets, remember that people may not have the ability to come here anymore, and remember that demand is only real demand if people can do it, right? So just because I would love to buy a brand new Ferrari today doesn't mean that Ferrari should make me one, saying that they're short supply because I would want to buy one because I don't have the funds to just go buy a brand new Ferrari today.
Yeah.
So, everyone would like to have a Porsche, but Porsche is not sitting at their factory saying, man, there's 100 million families in America and we're only producing 500,000 Porsches or something. We're short so much on supply.
Exactly.
They have to be able to actually come to the table, close on the deal. And if you're losing money on your home in another market, you all of a sudden might be in a position where you say, we no longer can move to St. George.
My contrarian nature, I look at, see the NAR talking about how many homes nationwide were short, but they never tell you where that metric comes from. Based on demand, right? And that's a kind of a different.
That's I think that's one of the most overutilized arguments around housing, and it really drives me a little wonky.
Yeah.
It drives you wonky?
Wonky.
Yeah, for the same.
I've totally been driven wonky before.
I am just trying to be clean on that podcast, man.
We didn't want to have the parental advisory.
No parental advisory.
Well, it's for the same reason I was just saying, right? Look, there can be so many, you can say, well, there's so many families in the country, so we need so many housing. But look, I've been in places of the country and outside this country where there's multi-generational homes, and that's really common, or multi-family homes that they're not even related, and they're, kind of living together, pooling money and resources so they can have a place to live. And just because you and I, our standard of living is that we own a home and our family live there, we live very comfortable lives, and we're so grateful for that. That's not the reality of a lot of people. And sometimes remember, real estate isn't about having a nice house with a pool. It's about having shelter. So some people are happy to have their whole family
and
living in one bedroom.
Not worrying about whether you have a place to sleep or not.
Yeah. It's a place to sleep, a roof over their head, keeps them safe from the elements, and hopefully some kind of safe place from, getting robbed or, whatever, right?
Assaulted, yeah.
It's
Well, and we got a safe, beautiful place here. That's why people are coming here from all over the world.
Absolutely.
Let's do a quick transition. Jeff, D.R. Horton, you're bullish on D.R. Horton. Is this the report we want to look at right here in front of us?
No, we need the construction monitor. That second page, Blake, on the construction monitor.
Okay, sweet.
Yeah. So just this is the first page, and scroll down to the second page.
For clarification purposes, not talking about D.R. Horton stock. They are a publicly traded company. We're not talking about their stock. We're talking about just
correct. Thank you for doing
their operations.
Yeah. So I don't know if you can zoom. Yeah, there you go. Boom. So I'm not necessarily bullish on D.R. Horton, but the numbers show that D.R. Horton's bullish on Washington County and Iron County. So this is going to encompass the Southwest.
Okay.
On the first page, it talks about all the counties. So Iron and Washington County are going to be the two main ones, which is where D.R. Horton's building. I mean, you can see they're pulling a bunch of permits. They're building a lot of homes. They're going to be here for a long time.
Yeah. So total permits. So we're talking.
It's all broken down into different. So if we're just looking at residential and we look at the year-to-date number there, single-family homes, 1,190 permits.
1,190 permits for single-family homes. Duplexes, twin homes, 25. Negligible apartments, condos, only 26. Come on, guys.
Yeah,
we need high-density stuff. 26 permits year-to-date for higher-density apartments, condos. Over 40% of our whole county lives one or two people in a dwelling. 40%.
Over the age of 55.
Over the age of 55. Yet only 26 condos or apartments have been permits have been pulled. So total is roughly 1,200 so far this year.
So
and
if you're a
160.
If you're a developer and or investor and you can figure out how to build an apartment complex in southern Utah, I think you'd be okay.
We'd be doing okay, but the
okay.
land value is expensive, right? We go back to that. It's like when you put it on a piece of paper and I got to pay impact fees on per door.
Yeah, so if you can figure out how to make it work.
Yeah, talk to the city council. The big takeaway is that number one of the permits being pulled was D.R. Horton for 160 permits, $27 million in value is what they give it year to date. And coming in number two, New Trend, which Tim Kinney and ERA is their brokers. I think Ray Cox and Ray and Bill Cox, they work with New Trend quite a bit, but 50 homes, that's a big number for Tim, knowing that he's been a big home builder. We got 66 units from Ents Homes, 60 for Cole West, and then it drops down to 21 for SNS.
Yeah, but if you look at number 5 and then number 8, they just kind of separate a few of those things out.
By value. Yeah. It's organized by value, not necessarily units. Stewart Enterprises, 23 units, but 1.9 million in volume. Some interesting numbers, but there's a big gap. It's a big jump. And the top 4 builders in the county are the Southwest, so including Iron County, D.R. Horton, New Trend, and Ents Homes, then Cole West Homes. So I thought that was interesting. I hope you guys see some value in it. This has all kinds of stuff. If you want to know who's building the most pools.
Yeah, a ton of data. It's all public too. So I mean, there's names and addresses. It's all public.
Yeah. So if you want to know, if you want to see this, make sure you sign up for our newsletter. Go to wealth435.com, sign up for the newsletter, follow us on Instagram, Facebook. If you go to our link tree, it's linktr.t. No, I'm sorry. It's going to be it'll be in the show notes.
Link tree. Drop it in the comments.
Drop it in the comments. We'll have this data available for you. What else, man? Oh, you thought this was cool. The Church of Jesus Christ of Latter-day Saints pulled one permit for $15 million. Mm-hmm.
Walmart. Where's the Walmart going?
Walmart pulled a permit for $5.1 million.
Vacant lot on St. George Boulevard.
I wonder if that's the remodel. I wonder if that's a remodel for the Bloomington one. Remember they're doing that addition?
$5 million though.
But it was year to date. So if it was at the beginning of the year, because they did that whole addition off to the side, maybe that's it.
That could be $5 million. Yeah,
that's probably pretty close.
So no Walmart on the boulevard.
I don't see
no Walmart on the boulevard.
Is Trader Joe's? Who builds for Trader Joe's?
Oh my gosh!
Find out who's the builder.
They've been talking about that for 5 years. Hot take: Trader Joe's is not. They're not coming to St. George.
My wife
in the next 12 months, but in 24 months, 36 months,
maybe.
I could see going out in Desert Color in the commercial space out there. I could see them doing a Trader Joe's there.
It would make sense.
It would make sense.
The day they announce that, my wife will actually pass out.
I think it'll be a mass fainting. Like, you remember back in the days, like women used to be, and they'd faint.
What's going to be the ratio of male to female faintings when Trader Joe's announces?
I don't know.
100%.
1-to-1?
I don't know.
I'm going to faint too.
Yeah, I'll faint. I'll faint for that. I like Trader Joe's.
Okay, guys, I think we're going to wrap this. This is a great episode. I think this is valuable if you're wanting specifically home housing market data, things that are going on from the building side and residential side. Branden, Jeff, thanks for being on the show. I appreciate you guys giving me some help and support in the housing market update. We do it once a month. Every other Tuesday, 435 Podcast drops episodes. We're following the election this year.
Voter information booth.
You're going to find us at Digby's Market. You're going to find us at the park, downtown Farmers Market. It's going to be kind of sporadic, so follow us along. But if you see our tent, it just says voter information with American flag on it. Come up, say hi. Hopefully we can get people registered to vote, which is what the goal is.
We have a lot of info on all the candidates.
Yep, tons of info on the candidates. I've sent out a text message to every candidate to fill out a voter information like a questionnaire, and then I'm going to make that public. I've only had like 5 responses out of the 18.
18 candidates.
Apparently
that is so many for a local city council election.
I text all 18. Okay, I text all 18. Seriously, only 5 have responded to me.
Well, there's already some interesting stuff going on with that. I'm sure you'll find people that listen to the podcast are going to pick all this up. But there's people that have like they represent a certain group or demographic or movement, and they didn't have a candidate that they knew that they liked. So they actually signed someone up to run just so that they can go find that person. And if they can't find the person that they want to back, they have someone in the race, but they're already planning on dropping out as soon as they find which candidate they want to back.
Yeah, so I think there's 3 or 4 of those. Yeah.
There's interesting. I mean,
one of the candidates is 20 years old.
Yeah, 20 years old. There's a candidate that's 20 years old.
So I think it's an interesting group.
A really interesting race.
It's telling to me that there's 18 here and there's 8 in Washington City. You're talking about the 2 powerhouses in Southern Utah. 3 seats are open, right? So they have the same number of places to, people to sit on.
Yep.
Yet St. George has 18 and Washington City has 8. What that tells me is that there's not very many people in Washington City that think they're doing that. There's things going wrong.
Yeah, it tells me the citizens in Washington City are
feel confident,
pretty okay with what's happening.
Or completely in the dark.
Either completely in the dark. I think Washington City. I think the city council there.
They seem like
the last
they're on
couple
the same
years
page,
have been on the pretty good page. I think Mayor Staley out there does a nice job. There's some good management going on in Washington City, and it doesn't have.
I've heard that from a few different people.
You can feel it when you go out and deal with Washington City versus City of St. George. City of St. George is that is a,
and they have a different ball of wax. Truthfully, they're even
way bigger, different problems,
but they don't have a whole lot of commercial and retail stuff in their city limits. They're trying to make a change towards that. They've really been a suburban neighborhood town, mainly residential. So it's going to be a great race. I hope you guys follow us along. Make sure you hit subscribe so that we can, pop up when new episodes drop. Drops every Tuesday at like 3 a.m. Thanks to Mallory and Blake and Blueform Media that are helping us put this thing on. Huge shout out. They're awesome. I've had nothing but rave reviews from the sound and the quality that they produce so far. So big shout out to Mallory and Blake. Thanks, guys. And keep following it along. Have a great week. It's beautiful weather today in June. I love that. We'll see you guys out there.